Thank you, Femo. Hi, like Femo mentioned, I'm Shane Glenn, and this is the FinTech Silicon Valley Crypto News Update. This is normally online, but today we're coming to you live from Shepard Mullen's office in San Francisco. Thank you, Shepard Mullen, for providing the space. This week's topics are Bitcoin at 18,000, Coinbase and the IRS, the SEC's cyber unit for its first actions, and kittens. So first off, many of you may be aware of this, that between last night and this morning, the price of Bitcoin went from 14,000 US dollars to over 18,000 US dollars, up to $19,000 on some Korean exchanges. It dropped a little bit, and as of about 45 minutes ago, it was sitting at around $17,600 on the GDAX exchange. It's almost impossible to say what caused this definitively, but there were two big technology announcements that happened in the last week that could have been behind the price move. The first one is that the Chicago Board of Exchange announced this week that they were launching a futures market for Bitcoin, which is something that's been widely anticipated. It's something that has been predicted to bring institutional money into the Bitcoin market, perhaps provide some stability, and could it ultimately be one of the underlying factors to allow a Bitcoin exchange-traded fund, which is something else that has been widely anticipated. The other big technology update was that there was a test of the Lightning Network integration. For those of you who don't know, Lightning is a technology that's being tested on Bitcoin that allows small and medium dollar value transactions to take place off-chain, which would be great for increasing the speed of transactions and lowering transaction fees on the network. There are three separate groups that each implemented Lightning, and the tests that were done this week showed that the different implementations could interoperate, which means that no one has to worry about which Lightning provider they're using. They can all be used together. So turning for a moment to regulatory news, a court last week ordered Coinbase to hand over to the IRS the account information of for all accounts that have traded more than $20,000 in a given year. This represents around 14,000 Coinbase accounts, which is actually smaller than a lot of people thought it was going to be, given the millions of Coinbase accounts that do exist. This is a result of a long-running fight between the IRS and Coinbase. It actually represents a dramatic reduction in the number of accounts that Coinbase does have to hand over. So I think the take-home from that is, if you're trading on Coinbase and you've transacted more than $20,000 in a year, you should really talk to your tax preparer. The other regulatory news is that for a while, the SEC has had a cyber unit, and part of the scope of their work has been cryptocurrencies. The cyber unit, they brought their first prosecution action this week. They filed charges against a Canadian company called Plexcoin. In a lot of ways, this isn't really thought of as something new. The CEO of Plexcoin has been in regulatory trouble for his previous companies. The Quebec's financial regulator, the AMF, had already initiated an action. This SEC action is viewed as a follow-on action, but it is the first time, and the SEC has gone after other companies in the cryptocurrency space, but this is the first time that the cryptocurrency specific unit has started an action against the company. And finally, we can't finish this talk without talking about CryptoKittens. CryptoKittens is a distributed app on the Ethereum network. It launched last week. People didn't really think it was going to be a big deal, but it's actually, as of Tuesday, 15% of all Ethereum transactions were related to CryptoKittens in one way or another. The transaction pool of transactions waiting to be processed increased from its normal level of 1,000 transactions to over 25,000 transactions. The company behind CryptoKittens, they sold off the Genesis kitten, which was the first kitten created on the network. It sold for over $110,000. So it's fantastic news because it is showing alternative uses for the Ethereum network. It's highlighting a distributed app, not just using the Ethereum network for payments, but it also does highlight the fact that one very popular application on the Ethereum network does have the ability to materially slow down everybody else using it. And so it highlights the need for increased transaction capability and decreased transaction times. So that's about it. I'll hand things back to Heather.